Thomas Hayes joins me now. What do you think about the possibility of rate cuts this year?
He's on the right side of the trade, David. If you look at commercial hedgers, they are the longest, the 10-year bond since 2011, before bonds rallied and yields compressed. You look at all the issues happening in Europe, no one's really talking about that. UK yields, German yields, the highest since 2011. The cost for France to borrow is higher than the cost of Italy to borrow. So I do think, and that's all caused by the energy prices due to the war, I think US is going to be the safe haven. Do I expect cuts before the end of the year? I think possibly in December. I'm with Peter, but I think more likely you'll get your first cut in the first quarter of next year. So I think while everyone is expecting a hike, I think you're going to see a neutral Fed chair out of Jackson Hole in the coming weeks. And I think you're going to start to see cuts, not hikes, in the first quarter of next year.
Well, I got to say, we got the 2-year up, but we have to talk about the 10-year before we move on, because that's up to a level that we haven't seen there's a 10-year. Actually, no, wait a minute. Is that? Sorry. Let's talk about the 30-year. Could you put the 30-year up there? 10 years up 4.7. It's down a couple of basis points, but the 30-year is up to a 19-year high, the 30-year rate. I mean, that's extraordinary. You think it's at its limit right now?
Yeah, I'm more focused on the 10-year yield than the 30-year yield. That's a sign of steepening. It's saying a little bit about growth. It's saying a little bit about inflation. But I would take the other side of this, David, as we move in coming months. You want to be a buyer on the long end, not a seller. And it looks like I've got some company in Peter, which we're in the minority right now. Everyone thinks yields are going to go higher and higher and higher. I think the more trouble you see in Europe, the better it is for U.S. Treasuries. And stay tuned on that front.
I like the optimism. All right, Micron is down today, but it was briefly back up above $1,000. It's up 254% this year, 737% over the past 12 months. Charles Payne has called Micron the new NVIDIA. Is he right, Thomas?
Well, I never want to go against Charles Payne, but I disagree. Memory is a very cyclical business. When NVIDIA was doing what it was doing and going straight up till about a year and a half ago, they had something special that no one else could provide between their software stack and, more importantly, the GPUs. Once the inference game came into play and CPUs became more important, Micron became less critical, and that's why you've seen a lot of these other semi and memory stocks rally while NVIDIA has been effectively flat. I would be fading this optimism in memory. It's very cyclical. New capacity will come on board. It is pricing in all of the excessive demand that people are excited about. Price is what you pay, value is what you get. AI is going to change the world. There are better plays to play AI right now. This one is too crowded.
All right. Well, if you think AI is too crowded, where are you finding opportunity?
Let's talk about AI beneficiaries versus AI cost centers. 60% of that electricity you're going to need for the data center demand. Data center demand is going to grow by 165% by 2030. 60% is going to be fueled by natural gas. Comstock Resources is the lowest cost producer in America. Haynesville Shale is perfectly located near West Texas. Jerry Jones, who is the owner of the Dallas Cowboys, owns 71% of the stock. He says it's the best investment he made, implying it's going to be more valuable than the Dallas Cowboys, and you can get it under $4 billion market cap today.
My son would argue that nothing is more valuable than the Dallas Cowboys, but that's just him. All right, Thomas Hayes, good to see you. Thank you so much. Appreciate you waiting on us here.